Hi guys, Josh here. I hope you're well. And today we're joined by Laura Chipp, who's a VAT consultant and TOMS expert. So for those of you for those who don't know you, Laura, why don't you tell us a little bit about yourself?
Okay, thanks very much, Josh. Yeah, so basically my name's Laura Chipp. I run my own VAT consultancy firm called VAT and we specialise in VAT, as the name suggests, but also very crucially, VAT in the travel and hospitality sector. So a lot of that involves the tour operators margin scheme, which we'll talk about today, and a lot of other specific VAT points for the travel and hospitality industries.
Yeah, absolutely. Yeah, it's quite a complicated topic, isn't it? So I'd imagine that's a full-time job.
Yeah, it actually is. It's funny because I think a lot of people think VAT is a little tick box exercise at the end of a sort of tax.
Yeah, VAT's 20%. That's it, isn't it?
That's it, exactly. Yeah, that's all I do all day, to just keep calculating 20%. But yeah, so yeah, it is a full-time job, and there's a lot of different things in the industry, especially for accommodation, that can be quite different depending on the circumstances. So yeah, the VAT are never-ending.
No, yeah, I absolutely, definitely agree with you there. So yeah, let's just get stuck straight in. So with regards to property, it's serviced accommodation units that are most often caught by VAT. So would you be able to quickly just run through how serviced accommodation is treated for VAT purposes?
Yeah, sure. So normally, and I think this is, again, there's quite a few VAT rules around property. So we're just talking about residential property today. So under normal VAT rules, residential property is exempt from VAT. And that's why you don't have VAT normally on your mortgage or your rent in a normal house. And that's why where you've got a landlord that might pass on to you a sort of long lease for rent, you won't get charged VAT on that because it's an exempt residential let. However, where we've got, and I think the VAT legislation on this point is very varied and there's a lot of exceptions to the exemption. One of those exceptions is the provision of accommodation in a hotel, inn or boarding house or a similar establishment. Now, where we've got serviced apartments and we're providing all the sort of bed linen, the cleaning service, all the sort of mod cons, furniture, etc., that you would normally get within a hotel or a sort of boarding house similar establishment, then the serviced apartments would normally fit this exception, which makes them standard rated for VAT. So under normal rules, that's why most serviced apartment operators would be charging VAT at 20%, so at the standard rate in the UK, on serviced apartments.
Yeah. Okay. Yeah, fantastic. So in terms, I know stays over 28 days, they're treated a bit differently, aren't they, under standard principles?
Yeah, so normally where you've got in a sort of hotel situation, which can include serviced apartments, if you've got a stay that's over 28 days, after that 28th day, it doesn't revert to being exempt, but it becomes what HMRC sort of call non-VATable for the accommodation aspect of that stay. Now, in the guidance that we have, you have to have at least 20% of that stay being attributed to non-accommodation, so things like catering, maintenance, cleaning, etc. So what you would do is restrict the VAT to only the percentage of the selling price that relates to the non-accommodation stuff. So for example, if you have £100 worth of accommodation, but you know that £30 of that normally relates to like the breakfast, the cleaning services, etc., you would say that, well, actually, only 30% of my selling price, so only the £30 in that 100, is subject to VAT at 20%, which gives you £6 of VAT in that 100. So it's a little bit complicated, but for most people, in most times in those stays, the sort of the catering, cleaning, non-accommodation bit is less than 20%. You have to include at least 20%. So that's why we normally say it's a sort of 4% VAT rate, because we say that 20% of the 100 is non-accommodation.
Yeah, absolutely. Yeah, that makes complete sense. So there are loads of different schemes available in the world of VAT. So would you be able to touch on some that apply to service accommodation and VAT? So there's the flat rate scheme. How does that work?
Yeah, so I think what we, I think the first thing, perhaps to set a bit of context, is that for serviced accommodation providers, normally the VAT suffered under normal VAT rules is quite extensive. Reason being that you might have, as I said, the rent that you pay to your landlords may very well be exempt as a residential long lease. But under normal VAT rules, you're having to pay 20% on the full selling price. So you'd have no input VAT to recover on your purchase, but 20% to pay on the full selling price. So it often means that serviced apartment operators are left in quite a sort of bad margin position because of this VAT charge. So that's why this particular sector, we look to try and make that VAT burden as little as possible. And I think obviously key here is that if you're passing it on to an individual who's staying, they can't recover the VAT you're charging. So it is really a VAT burden on you, the operator. So how the flat rate scheme for VAT can work. So the flat rate scheme, first of all, I should mention that it applies to businesses with turnovers of less than 150,000 a year. So it won't apply to all operators. Once you're in the scheme, you must leave that scheme once your turnover goes over 230,000 a year. And these limits do vary from year to year, so do check them. But so it has its limits in terms of the sort of scheme qualification. But what it means, the reason the flat rate scheme exists is it's a way for small businesses to stop having to account for all your sort of output and input VAT records. And so they say that basically you, instead of paying output VAT at 20% and recovering input VAT on all your purchases, you pay a flat rate to HMRC on your sales and don't recover any input VAT. So it basically, these rates vary per industry. It's what HMRC deem to be normally the sort of net amount of VAT you'd pay over. So for serviced apartments or for hotels and accommodation, that rate is 10.5% at the moment, which would mean that if you were going to do the scheme, you would pay to HMRC 10.5% on your VAT on your sales price, but you wouldn't recover any of your input VAT, apart from some very sort of exceptional circumstances with capital items. So it's a good way, it's a really good way actually of saving money on VAT, especially as I mentioned earlier, because there's not as much input VAT to recover for serviced apartment operators. You're not losing out that much by this sort of input VAT block, but you're gaining from having to pay 10.5% VAT on turnover rather than the normal 20% VAT rate.
Yeah, absolutely. Yeah, that's a really thorough explanation. Okay. Yeah, would just be kind of an overview on the TOMS scheme.
Yeah, so TOMS, and again, as I mentioned earlier, my specialist subject, but TOMS is short for the Tour Operators Margin Scheme, which may seem a bit strange that we're talking about that in the context of serviced apartments, because most operators wouldn't consider themselves as tour operators. But the TOMS rules apply when any business buys in and sells on travel services, either in their own right or within a package. So travel services include quite a few things, but one of those is accommodation. So where anyone buys in accommodation and sells on to, normally to the traveller, to the person travelling themselves, in their own name, so as principal. So you can't be an agent in the circumstances, you have to yourself contract to buy in and sell on, and there must be no material alteration. So in a classic tour operator setup, you may buy in sort of hotel accommodation, flights, etc., package it up, sell on. You're not materially altering anything, you're almost sort of just buying on paper, selling on. So you don't actually touch the services. So that's sort of how it applies, that's sort of when it applies. Now what TOMS means, and the reason it came about, is a simplification to stop tour operators having to VAT register in every single EU country they do business in. But the result of the scheme is that you pay VAT only on the margin you make on your products, and input VAT is only blocked on the direct costs of your services. So for example, if you are selling accommodation you may sell for 120, your purchase price, say 90 as the gross figures. This gives you a margin of 30, and your VAT payable is carved out of that margin. That margin is gross, so your margin is a sixth. Your VAT payable is 1/6 of that margin, so which would be 5. So you're very much paying. So with TOMS, you are very much paying a lot less output VAT than you would be under the normal VAT rules. And obviously we do have an input VAT restriction under TOMS, but only on direct costs of the services.
Okay, yeah. So you mentioned direct costs. So under TOMS, so for a typical serviced accommodation operator, what would classify as a direct cost?
Yeah, so I think the first thing I should probably mention first is that, and this is why I vaguely brought up this notion of material alteration a while ago. With serviced apartment operators, I think one thing I probably should say about this is that we really need to, TOMS is great for serviced apartment operators. It really works in most situations a lot better than most of the other VAT schemes. But the issue normally seems to be whether or not a serviced apartment operator qualifies under the TOMS rules.
Yeah.
So just to go through the conditions again, firstly, it must be a travel service. So accommodation, yes, you're normally qualifying in that way. Selling to the traveller, so you're selling to either the person or the business who's themselves going to stay. Selling in your own name, so you are contracting with your landlord for the purchase and you're contracting with your travellers for the sale. So that's all fine. The last condition is this one about material alteration. So you have to buy, in order to qualify under TOMS, you need to buy and sell the services with no material alteration. Now, this is a tricky one. So with HMRC don't define material alteration very coherently, at least. It's very much a case of decide for yourselves and hope for the best. But what we'd normally consider to be material alteration, and it's a bit of a sliding scale. So if, for example, you buy in a blank apartment and you add furniture, you add all the sort of, like sofas, beds, crockery, utensils, etc., then I would say that's absolutely material alteration, because what you've bought in is a blank apartment. You can't sell that on as holiday accommodation. No one would go on a holiday and stay in an empty room. They just wouldn't happen. So that, to me, you have to really affect that apartment. You have to add all the things to it in order to make it enough to be holiday accommodation for your onward sale. Now, obviously, at the other end of the scale, if you buy in an apartment from the landlord, you add nothing to it at all and sell it on, then there's no material alteration. Now, what I tend to find with serviced apartment operators is that a few things are added. So it's really just establishing if those few things added are enough to be material alteration or not. Remember, we don't want material alteration. But normally we may say that obviously someone might add a cleaner. So you might have a cleaner between check-ins. Fine, you change the linen. That's fine. There's actually something in HMRC's guidance that says that's actually fine and doesn't itself make it material alteration. But I think it's when people start saying, well, no, we are sort of painting the rooms before people enter. We do have a designer in to completely change the room, or someone advertises every single apartment we have has all these mod cons, which are added by the serviced apartment operator. Then we start to question, is there a material alteration there? So that is really a key question for operators. And that's really normally, I think, when I'm advising, that's the main point that needs to be established. But anyway, that's just me going off on a tangent, but I think it's an important tangent to go.
Absolutely, that is the biggest thing, really, with TOMS, isn't it? It's the material alteration.
Yeah, it is. I think in this sense, it really is. I think for other sort of types of businesses, there's different sort of key areas. For serviced apartment operators, you normally meet the other three conditions quite easily, but it's just the last one, this material alteration that really needs to be looked into, because obviously what we don't want is for someone to say, well, I think I qualify for TOMS, I'm going to start using these rules, they work really, really well for me, but then HMRC come in a couple of years' time and say, no, you're not in TOMS, give us all this money that you've underpaid. So we want to make sure it's that anyone considering using TOMS is done in the best way possible, so that you're not taking on any risk of, you know, underpaying VAT whilst getting yourself the absolute optimal treatment.
Is there any way to get any kind of non-statutory clearance or any kind of heads up from HMRC that you're good to go?
It's a really difficult one. Because in theory, yes, there is a way. You'd write into HMRC's written inquiries team and say, this is my situation. HMRC would say they don't normally give out written rulings unless they don't consider it to be covered anywhere in their guidance. Now, material alteration is covered in their guidance, but not to a great extent. So sometimes people have got lucky and they've written to HMRC, and HMRC have come back and given them a written ruling, which is fantastic. And if you've got something in writing from HMRC saying, yes, we agree that TOMS applies, that's fantastic. As long as you've given all the correct information and the full information, and they've written back and agreed, fantastic. I think I normally see that doesn't happen as often. More typical response you get is HMRC say, well, here's a link to our guidance, go and have a look. That's not as full and helpful as we'd like. So yeah, it's possibly useful to do, but I would just say I probably wouldn't spend as much time on that. I think if you're going to send anything in, I'd probably do something that's fairly low key, just because of the success rate of getting something back from them that is proper. Is sorry, that's a really bad word to use. I don't mean proper, but explanatory, is perhaps not as often.
Yeah, absolutely. So assuming that you tick all the boxes, you've not so you're not materially altering it. In terms of the costs that come into the calculation, how is that structured? I know you mentioned linen and things like that. Would that be an allowable cost?
And again, because there's nothing in the guidance, it's a difficult one. It's with TOMS itself, normally all you're allowed to bring into the calculation, and when we're talking about bringing something into the calculation, we mean what costs can we take off of our selling price to give the margin. So obviously you want to, because TOMS is VAT payable in the margin, you want to make that margin really as small as possible for TOMS purposes. But under TOMS, HMRC's TOMS guidance says you're only allowed to include direct costs of the travel services themselves. So we don't have any clarity on how this works exactly for serviced apartments. My opinion would be, in terms of direct costs of the property, it would be the rent, utilities that you pay on top, but not that much else. Reason being that if you've got if you take the rules literally, direct costs of accommodation should just be the accommodation. So things like linen, etc., isn't itself at a cost of the accommodation. But obviously, because things like linen, possibly sort of maintenance staff, etc., because they're not direct costs, it means you can recover the VAT. So if you are buying things for the apartment, and again, I would not advise kitting out the apartments to a great extent yourself, because that brings out material alteration. But if you are buying things for the apartments, it means that the VAT can then be recovered, because it is not a direct cost of TOMS. I should just mention, if you're using the flat rate scheme instead, none of those costs would have input tax recovery, because they're all banned. For TOMS, it is literally just the direct costs. And I think because the biggest direct cost is the rent itself from landlords, which is exempt, you're not losing out that much from not having that input VAT recovery right.
Yeah, absolutely. So essentially, it just comes down to the rent you're paying the landlord, and then just the utilities. Anything else that doesn't really come into it. So I suppose that follows into the kind of next question we get asked a lot is, so with TOMS you have so it's not the actual turnover that counts at the point at which you must register, is it? It's the margin.
Exactly. Yeah, so that margin calculation that we were just talking about, so selling price minus direct cost, it's only when that margin goes above the VAT registration threshold that you're required to register for VAT in the UK and account for VAT. And at the moment, that threshold is 85,000. So for those making a direct margin of less than 85,000, it may be that there's no registration requirement at all for quite a while.
So at that point, it's just a case of keeping everything ticking over, just monitoring your margin, and then at that point, looking to register.
Yeah, I think so. I think if you're a service department operator and your margin is possibly getting up there towards the 60s, 70s,
yeah,
start putting a calculation together so that you can monitor that margin month by month. So for those that don't know, the VAT turnover threshold works on a cumulative monthly basis. It's not a case of this financial year we've made X and the next financial year it's Y. We literally look at the 12 months January to December, and if that doesn't reach it, we then look at the period February to January. So it's a cumulative basis that you need to look at the end of every month to see if your 12 months past has given you a threshold, an amount above the threshold.
Okay, yeah, absolutely. So I know you mentioned that when you're on TOMS, you can't actually issue a VAT invoice, can you? So in what circumstances would you probably not want to use TOMS?
Yeah, so I think that's exactly right. So with TOMS, you can't issue a VAT invoice to anyone, reason being that under TOMS, your customer isn't allowed to recover the VAT on the margin. And I'm not actually sure why this is in place. And actually there was a case a few years ago that questioned whether actually that is the case or should be the case. But in the UK at the moment, your customer isn't able to recover the VAT charged under TOMS. So of course, if you're selling to travellers, so individual travellers, doesn't matter because people can't recover VAT anyway, tend to be not VAT registered. But if you're selling to a business customer, so a corporate traveller, for example, who is looking to recover the VAT, then that obviously puts you at a disadvantage, because whereas if you've quoted a price of 120, they're expecting it to be 100 plus 20 VAT, which they can recover. Whereas actually it's a price of 120, no VAT to recover, so you instantly become more expensive. Now, if you fit the circumstances of TOMS, so if you have an apartment where you haven't materially altered it and you fit the other conditions, TOMS applies compulsorily. So you sort of have to use TOMS regardless. But obviously with this idea of material alteration, we can, I suppose, in a way, use it to our advantage. So if we want to fall into TOMS, we would just say, right, well, we need to make sure we don't materially alter this apartment. If we want to actually avoid TOMS because we know we're selling this apartment mainly to corporate individuals, so corporate travellers, then we might say, right, we want to try and materially alter it as much as possible so that we do avoid TOMS. So it is something that you can go between, but if you have one single apartment, you can't choose per booking. So you couldn't say, when I booked this same apartment for individuals, it's TOMS, and this exact same apartment to corporate travellers is not TOMS. It doesn't work like that. It works, this does work per apartment. So you would need to make sure that whatever you're doing, whether you are looking to fall into TOMS or not, it's consistent for each stay in that apartment.
Okay, well, yeah. So in terms of, I know you mentioned the 28-day rule for normal VAT, but it's different, isn't it, for when people are on TOMS?
It is, well remembered. Yeah, so on TOMS, unfortunately, that doesn't apply. So with we were talking about earlier, this 28-day rule. So after for long stay apartments, after 28 days, the VAT rate goes down to sort of 20% or at least 20% of what it would otherwise be. So most people call this the 4% rate for long stays. That doesn't apply under TOMS. So under a TOMS scenario, that it isn't taxable at 4%. It is still taxable at 1/6 of the margin. You're not actually losing that much, because where we're talking about the 4% on turnover is not normally that different to 20% on the margin for a lot of businesses. So yes, there is a little bit less, you might get a little bit less profit under TOMS for those stays, but not a considerably less amount. So I think if you're occasionally doing long stays, and I think TOMS is still a very good option, you may take a slight hit on those long stay bookings to what they were. But if you're always doing, or sort of almost always doing these long stay bookings, then you might want to consider trying to avoid TOMS, and again using this material alteration rule.
Okay, yeah. So in terms of the material alteration, I suppose, have you known HMRC to go after people to try and get them to almost be on TOMS when they're not on TOMS, and vice versa?
I think it's a new area for HMRC, because I think the serviced apartments industry is starting to clock on to the TOMS rules and how they can really benefit them. And people are taking different approaches. I have seen, I think especially when someone was using the normal VAT and decided to then go to TOMS, obviously their VAT returns look a bit different. They're paying less VAT, they're possibly recovering a little bit less VAT, and HMRC do clock on to that. And often will say, you know, maybe not come around to do a proper visit, but may sort of ask a few questions. Now this sometimes, because HMRC themselves, I think, let's say TOMS isn't their specialist subject, but they do often sort of ask, and I think you get some quite inconsistent approaches. So it's very difficult to say, because some clients I've seen have written to HMRC and said, well, this is what we're doing, you know, following an inspection or sort of remote visit, and HMRC have come back and said, okay, fine. Others have really been scrutinised. So, I mean, I think personally, I won't tell a client or any business if they're in TOMS unless I'm confident they are. I don't like taking that risk. I think it's too important. I think businesses need to ensure that they don't take on any unnecessary risk, I think, with things like that. But I think some businesses are looking at the rules and thinking, oh, I sort of fit into these vaguely, I'm going to decide I'm on TOMS. And it's at that point, I think HMRC could come in and either make a big deal out of it or not. I haven't seen that many examples, as I said, because it is quite new. And I think, as we were talking earlier, Josh, I think it's only been the last few years that serviced apartments have really started to become, you know, exploded in terms of the market. So HMRC are finding this as a new thing. I would expect as time goes on, we'll probably see a bit more guidance on material alteration for this reason, and that will give HMRC a bit more clout to review things a bit more closely than they are at the moment. But yeah, I mean, I think it's my advice in any situation for VAT is don't do something for VAT unless you are sort of clear and you've either had it checked out or checked it out yourself considerably, because even though the TOMS is a great way of sort of saving VAT cost, I don't think it's worth taking the risk for if you don't definitely fall within it. So yeah, I'm sure you'd agree as an accountant.
Yeah, absolutely. So I know that kind of in terms of the revenue being lost by HMRC for people being on TOMS, it's probably, I'd imagine in totality, it's pretty quite significant. So do you think in the long run, there's almost a risk of them arguing that it doesn't, almost like a blanket ban to serviced accommodation and TOMS, and just saying, no, you've got to stick to some of the standard schemes?
I think they can't do that at the moment because TOMS just is what it is. And unless you wanted to change the TOMS scheme itself, you can't blanket ban anyone. They can get more, because the way it works with TOMS, it's an EU scheme. I'll come on to this in a second. But it's an EU scheme. It applies as it is under those 4 conditions. But each member state can very much sort of, I guess, impose those conditions. So HMRC have said the 4 conditions we said earlier. So you have to be in your own name. Travel services include whatever they do, material alteration, and selling to the traveller. Those are very much sort of set out by HMRC in their guidance as the UK's interpretation of TOMS. Now, obviously, what HMRC could do if they thought this was going to become a problem is perhaps change the UK's interpretation of TOMS. Now, are they going to do this or not? My inclination is that no, not under normal circumstances. TOMS works well in some degrees for sort of most businesses that use it, so the common sort of tour operator businesses. The only thing that obviously is coming up is Brexit. I know we've all forgotten about Brexit in the wake of new global developments, but it is coming up. And as I said, TOMS is an EU scheme, so it may very well be that after Brexit happens properly, whenever that may be, that TOMS does change in some way or significantly. At the moment, we just don't know because no guidance was released. When we were looking to get a no-deal Brexit, when it was looking possible to get a no-deal Brexit, HMRC had very much said that the TOMS rules were just going to be pretty much copied into UK legislation, apart from it was only UK travel that was going to be standard rated. Now, if that is the case under this new sort of withdrawal agreement, then it sort of signifies that HMRC aren't planning to change the domestic TOMS rules. But obviously, if things do get out of hand, who knows? But my opinion is that at the moment, the service department operators who are using it are not themselves a big enough category to warrant that change. But yeah, never say never, who knows?
Yeah, that's certainly reassuring for a lot of people out there.
Good.
Okay, so what else? So if you're already on the standard rate scheme, is there any way we can go back and apply TOMS and get some cash back? Is that possible?
Yeah. We've done this for quite a few people actually in the last year. So this is basically where you are at the moment. You're not aware of TOMS perhaps. Maybe this is the first time you've ever heard of TOMS. But where you may have then been paying 20% on your output VAT under the normal VAT rules. Now, what we've done for quite a few service department operators is obviously analyse what they've done, sort of review their contracts, review things like what are they adding to the service departments, are they materially altering it? If we're happy that TOMS does apply already and should have been applied backdated, then yes, absolutely. Normally that will result in in some cases, quite a large VAT refund for the past however many years. Now, HMRC we can all go back 4 years for VAT. So if we know that there's been, I suppose, what's called a VAT error, which we don't like the sound of, because normally that means you've done something wrong, but it really just means that the VAT amount paid in the past has been wrong. And in this case, a lot of the time, where you haven't been on TOMS but should have been, you've probably paid too much VAT. So you can absolutely look to correct that for the up to 4 year periods going back, as long as obviously you do fit the TOMS criteria. But yeah, definitely, and I'd absolutely consider it. If anyone thinks they could be under TOMS, I would absolutely recommend having a look into that in a bit more detail, because the savings can be quite significant.
Yeah, especially at the moment with service accommodation being hit massively. There's never been a better time, to really look into this and seeing if you due some tax back.
Absolutely.
So that's just one of the ways that TOMS can help businesses. I know we mentioned before about how the impact TOMS can have on cash flow, because there's a few different tricks. I know you can use either departure date rather than payment date.
Exactly, yeah. So in TOMS, so first of all, with TOMS, it does help you out a bit, because TOMS is only payable based on departure date. So normally, for standard VAT rules, you would normally take the earlier of the invoice date, the payment date, and the date the service is used. So normally, if you're invoicing or getting payment for a service before check-in date, it would mean that you'd have to account for VAT at that point of invoicing or payment. Now with TOMS, you only have to account for the VAT on the margin when the service has actually taken place. So that would be check-in date for most operators. That could obviously be quite a good thing for cash flow. The other thing is, perhaps not quite cash flow, but very relevant at the moment, is cancellation income. The HMRC changed this last year. So in the past, cancellation income was always outside the scope of VAT. Because it was seen as income, not for any service. It's just sort of almost compensation in that way. Now, as of last year, cancellation income became taxable based on the rate of the service that would have been taken on. So that means that under normal VAT rules, if you cancel, if your customer cancels accommodation and you keep some of that income, so you retain 50% say of the income received, you would now have to pay VAT on that income. However, with TOMS, because it's departure date basis, so you only account for VAT based on your departure date or check-in date, if that check-in never happens, there's no way of having to account for VAT on cancellation income, because we don't look at the date the payment's taken place or the date the invoice has been issued, but only looking at check-in dates. So we never have a tax point for VAT under TOMS if that check-in never happens. So it just means that a lot of people at the moment, unfortunately in the last couple of months and possibly for a bit longer now, have had quite a lot of cancellation income. It just means that under TOMS, you wouldn't have to account for any VAT on that cancellation income because the service has never taken place. You haven't had that check-in. So that is really good to know, I think, for a lot of people, especially at this time.
Yeah, absolutely. It seems like TOMS does have a lot of advantages. So I know mostly so far we've talked about people who are doing it on a kind of rent-to-rent basis, a sublet agreement, or however it's structured, where ultimately there's a landlord involved. But for people that own their own units, essentially they can't apply for TOMS in their own company because it'd be an in-house supply. Is that correct?
Yeah, exactly.
So,
yeah. So you.
Are there some structures available where they might be able to have, if they've got a group structure, is that where it gets a bit shady and not good?
It gets a bit shady. I have seen actually about a month ago a very genuine setup where it was a group setup. You obviously couldn't be a VAT group, but if you were a corporate group, where you had one company that owned the apartments and the other owned the apartments and was sort of obviously kitting them out. The other was properly set up and its main function was sales. So the first company is very much the specialist in actually, doing the property up. The other one was like doing the sales. So its main function was obviously having the staff going out doing the advertising of these properties. So the two companies very much had separate roles. So that was a clear, legitimate business reason for having two companies set up. And yes, the flats were bought from one to the other and then sold on. So that sort of worked. But I guess I wouldn't personally recommend just having a company. You'd have to actually physically do something. So your staff in one company must be doing something that relates to that part of the sale. So in this situation I dealt with recently, the staff in the first company were obviously a sort of the property, like the owner, the manager, the sort of staff who would do all the refurbishment. The other company, their staff were very much sort of sales staff, advertising staff. You couldn't just set up, in my opinion anyway, you couldn't just set up a company and all still work in the same office and it be the same person who owns both. That I would not say is ideal, and I think HMRC would have questions about that. So I think if there is a way and there is a genuine business reason for having two, or at least there's a possibility of that, then it's something to look into. But I wouldn't personally advise taking the risk unless it has been looked at properly. Yeah,
so it's not something to rule out. TOMS might be available, but definitely just speak to a professional and get some good advice around that.
Yeah, I think that's something even personally, I think I would probably not want to do on my own. I'd probably also speak to a couple of contacts to sound out that type of thing myself. So I wouldn't really advise anyone to do it without really taking advice on that area.
Yeah, absolutely agree on that. So I think we've covered absolutely tons of topics there. Is there anything else people need to be aware of, or any kind of key takeaways that people should bear in mind when running their serviced accommodation business?
I think all I would say is, I think one thing that we see, I think for VAT purposes, is just having all the detail available. So I think when one of the sort of main things for me is obviously when I look at anything for VAT purposes, I like to sort of be able to see how can we best save money, how can we make sure everything's as organised as possible, so it's very clear how VAT can be saved or how TOMS might apply. So I think I would just say, as a sort of another thing to do is make sure your sort of sales and cost of sale are set out really, really clearly for all your account users. And especially I think for VAT purposes, that is something that's really, really useful, just because it makes it very easy to see where VAT can be saved, where TOMS might apply. And if you do have to apply TOMS, the calculation itself is a little bit more involved than me just saying to you sales minus cost net margin. So I think just make sure all your records are kept properly if you're looking to go on TOMS. But I think all that we've talked about today is it's very much everyone has their own business and everyone runs their business differently. And I'd be loath to sort of put every single operator in exactly the same box and say, you know, you all operate the same. You don't. People are very different. That's what makes your business unique. But I think really today what I've been talking about is more of an awareness point that for VAT there are several options for you. TOMS is a great one. It may be that the flat rate scheme is best for you. It might be that normal VAT is best for you. So I would just kind of really just consider that. Don't write it off at just a standard 20% of your sales, but really look into seeing whether it can work for you. Seriously, I think over the past, year, I suppose, we've saved a lot of money for service operators just by looking at that. So I think all the things we've talked about today are just things for you guys to consider, and you know, hopefully make your VAT position a lot more optimal than it may otherwise be.
Yeah, fantastic. So if anybody who wants to get in touch with you, or I know I've read most of your articles you've written, is there any place people can get in touch or kind of look at some of your articles at all?
Yeah, so I think all my articles are on LinkedIn and on my website, which is vatnav.com. And yes, I think hopefully there's quite a lot of articles in there. So we do have one on serviced apartments, which does set out all the stuff on TOMS and material alteration and stuff as well. But there's also several others on TOMS and just travel VAT in general. So hopefully there's something for everyone to at least get some guidance on from there. But yeah, I'm always very happy to speak to anyone, just even for an initial call, just to see whether there's something you might be able to look at. So yeah, please do contact me. All my details are on my website too. So yeah, very happy for that.
Oh, fantastic. Well, I suppose that's all for today, everybody. If you've got any questions at all, or there's anything else, drop them in the comments, send me a message, and we'll be happy to help. Other than that, thank you very much for joining us, Laura. It's been fantastic. I've certainly learned a lot from this, so I have no doubt that anybody watching this would take away a ton of value.
Well, thank you very much. Thank you for having me.